So today was an interesting day. Today you had a stock market that was doing some really crazy things, and you're gonna have some more thunderstorms on the way if you're not careful. But at the same time, there are some opportunities in this market. If you are a little bit worried about what happened this morning, I've got some good news and some bad news. So get comfortable, buckle up, seatbelt. We're gonna get started on the Black Financial Channel right now. Hey, what's going on, guys? Welcome to the Black Financial Channel. This is theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we talk about black wealth and black economics every single day, sometimes as much as 10 times a day under one condition. The condition is that we are black first. Black first means we believe in black wealth. Black first means we believe in black love. Black first means we believe in black family. Black first also means we believe in black education. If you agree with this philosophy, then put a hashtag B in the number one in the chat. You ain't got to be black to be here, but you got to respect black people, and so that's our requirement to be on this platform. Hey, El Hodge, how you doing? Shout out your city. I see Maurice Harrell out of Sarasota, Weberton, Clyde Lawrence, DDS. How you doing, brother? Thank you so much for coming in and moderating. I appreciate that. Okay, so and hello to everybody on Instagram. My Instagram is the real Boyce Watkins. So how many of you, give me a yes or no, how many of you looked at your stock portfolio today and got a little bit sad, saw some blood? If your stocks kind of went down, give me a yes in the chat. If it went down, let me just say this: if your stock portfolio went down today, this is going to sound crazy, but I'm going to explain why. If your stock portfolio went down today, that is good news. That means that you're investing the right way. That means you're doing the right thing. There are people who are day traders who say, "Ha ha! I made money today. I made money because I bought a bunch of puts and I was selling short." Da, 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 da. Yeah, you did. You did good. Congratulations. Half of all day traders on any given day end up making money. Why? Well, because they're flipping a coin. They're flipping a coin. And I'm not making fun of day traders and nothing like that. So if you're a day trader, don't get mad at me. But I'm just telling you, I've studied all kinds of financial research and financial theory. I've read 10,000 research papers on the topic on swing trading, day trading, market timing, and everything else. And let me just tell y'all, just from a fundamental standpoint, if I had told my professors when I was in graduate school, the leading experts on stock markets on earth, that I believe that day trading is the easy way to make money consistently, they would have laughed at me. They would have thought I was stupid. So what I'm saying to you is, if your portfolio went up today, there's a good chance that means you're investing wrong. That means you're not investing the right way. Most major money managers did not make money today, and that's because they are, on average, betting in the right direction, so to speak. And so here's what happened today. Here's what happened. This all came down to not inflation. Well, we know the big word inflation. We've been talking about the I word for a long time. Anybody out here knows that the CPI went up. If you didn't know it, that's okay. Now you know. If you don't know, now you know. The consumer price index went up today. And inflation is pretty red hot right now. That is the big demon right now in the financial markets. Now, here's the problem. The issue was not that inflation is high. We know inflation's high. The issue is not that the CPI numbers were 8 point whatever they were. I'm going to read the article in a minute. That's not the issue. So just be clear. So somebody says, well, the market went down because inflation went up. That's not true. That is not true. Let me tell you what is true. What is true is not that inflation went up. It is that it went up more than it was expected to go up. Right. In fact, actually, experts expected it to drop a little bit. And instead of dropping a little bit, it actually went up a little bit. And that's enough to really shake a market, to rock a market. It's enough to make you feel like something major happened. Well, really, it wasn't that something major happened. It was just that it happened in a way that was different from what was expected. The market is driven by a couple of things. Here are two things based on financial theory. You guys know I've taught finance to college students for almost 30 years now, University of Kentucky, Indiana University, etc. Let me tell you this: two factors move the stock market: information and expectations. Information and expectations. Information as in, what do you expect to happen? What are the fundamentals of the economy? What are the fundamentals of the company? Expectations as in, what do you expect to happen? And how did the realization match with the expectation? So what I will say to you is that people who don't understand the market are going to tell you all, are going to say all kinds of things. They're going to tell you that they can predict which stocks are going to go up and down and when and all sorts of that. They just get lucky. Again, it's like me telling you, I predict that if I flip this coin, it's going to land on heads. Well, I'm going to be right half the time. So I can go to the people that saw me be, right 2 or 3 times in a row and say, hey, see, I can predict coin flipping. That's not true. You can't predict coin flipping. It's not possible. So what is going on right now is that you had a coin toss of expectations. Basically, the market expected the inflation report to be good, slightly good, not great, not better, not significantly better, but slightly good. And it turned out to be slightly bad. You know what I'm saying? So what happened was that as the market was preparing for the release of the CPI number, give me a yes in the chat if you follow what I'm saying. Give me a yes if you get what I'm talking about here. As the market was expecting the CPI report to be positive, this is information, the prices started going up. If you notice, the last 4 days, your stocks probably went up. If you're investing appropriately, if you're properly diversified, you were seeing a lot of green in your accounts. And remember yesterday, if you go back yesterday, I was warning you guys, be really careful because you have a pregnant moment. You have information that's about to be released. You have the showdown. Like I'm a poker player, and in poker at the end, you have the showdown where you really got to show the cards that you actually have. You do your betting and you're sort of sending signals about what cards you might have, but then there's the showdown where you really find out who's got the better cards. So now you've had the showdown. That's where expectations kick in. So the reason that your stocks drop wasn't just because inflation's high. You pay attention now. It wasn't just because inflation's high. We could deal with that to some extent. It wasn't just because inflation went up. The reason your stocks dropped is because inflation went up a little bit when it was expected to go down slightly. If they had expected inflation to go up, the amount that it went up, your stocks wouldn't have done a thing. In fact, if they had expected inflation to go up by 0.5 percentage point and it only had gone up by 1.1 percentage points, your stocks would have actually rallied. Do you follow what I'm saying? Does everybody get what I'm saying? This is a nuance. You're not going to really see this in a lot of other places because it takes a long time to really understand the expectations versus realizations. And a lot of people, it's like investing. A lot of people think that investing means you should pick a good company. Yeah, but a good company does not make a good investment. Just because it's a good company doesn't mean it's a good place to invest. You have to look at the price. You have to look at future earnings. You have to use discount models. There are lots of things that have to apply before you can determine whether it's a good investment. So that's the point I want to make about today's market drop. Don't panic. It's not the end of the world. This is not the Great Depression. This is not the market collapse that your grandma been warning you about since you started investing, and your grandma been telling you, baby, don't go to the stock market. You're gonna lose everything. This is not the financial apocalypse. This is just another showdown. And the money that you made over the last 4 days was an illusion. Think of it like a bad relationship. You thought the girl loved you and you found out that she really didn't. Now, and so did you lose something or did you never really have it at all? Do you get what I'm saying? Do you understand? See, in a way, so in a way, yeah, you lost some money, and my heart goes out to you. I'm not making this light at all. Believe me, I bled a little bit too. But the reality is that a lot of the money that you lost was money that you were making over the last 3 or 4 days anyway. And that money you were making wasn't really your money because the market was moving based on an expectation that was not consistent with the final realization. They expected something to happen that didn't happen. Expectations is everything. Again, compare it to dating. If you have low expectations and they buy you a cheeseburger, you're like, oh my God, she bought me a cheeseburger, right? But if you have high expectations, like she's going to be my wife, and then she only buys you a cheeseburger, then you're sad because you're like, damn, I only got a cheeseburger. I thought I was going to get a spouse. You follow what I'm saying? Okay, give me a yes if you get that analogy. I like to use analogies to help you guys understand what's going on. So hit the thumbs up button, thumbs up, share, subscribe. I got to give the Dr. Boyce shout out for today. One of the Dr. Boyce shout outs is digitalbrilliancehour.com. They are one of the sponsors for today's podcast. And digitalbrilliancehour.com is started by a guy named Kevin Epps, a brother out of Chapel Hill, or excuse me, it looks like Morrisville, North Carolina. He says Digital Brilliance Hour ensures Black and brown youth are prepared for a global workforce. Through team building activities, students gain the STEM knowledge and skills to thrive in the fast-changing IT field or pursue other post-secondary college and career options. And he says you could also go to whatisdbh.info for more information. What is dbh.info? But I've actually got the main URL for the company, digitalbrilliancehour.com, on the screen, so you can go there and take a look. And I think this stuff is really important because we talked about this before, that a lot of our kids, you're getting college degrees, but the question that I ask you is, are you getting skill? All right, you got to understand the difference. A college degree, believe me, I'm a college professor. I believe all in university learning and all that stuff. I did it for many years, and in fact, I wrote a book called Everything You Ever Wanted to Know About College. In case your kids are in college and they want to know how to make straight A's, it is not hard to make straight A's in college. It is not hard to make straight A's in college. It is not hard to make straight A's in college if you know how to do it. So actually, that book, it's on Amazon somewhere. If you want to go find it, I wrote it years ago when I was teaching at Syracuse University. If you want to go take a look, feel free. But anyway, so college is great. College is fun. College is good. But one of the things I like about what digitalbrilliancehour.com is doing is that a lot of college students are graduating with a lot of debt and no skill. Right? That is a dangerous place to be when you have a ton of debt and all you got is a piece of paper. A piece of paper is not the same as skill. Skill is when you can actually do something. Skill is when you can solve a problem. Skill is when you can help your employer or your own or yourself, if you run the business, make money or complete a goal. And so what I would say is that in general, I like what Digital Brilliance Hour is doing because the exposure to STEM is going to be one of the leading indicators in terms of which communities are going to dominate in the next generation. Did you know that China produces more engineers than the US, Japan, and India combined? They produce more engineers than all three of those countries combined. So who do you think is going to dominate the future? The people with a bunch of bachelor's degrees with student loans who are doing TikTok dances for a living, or the people who are actually learning how to build bridges and roads and electrical infrastructure and design amazing engineering projects in the future? I put my money on China. So digitalbrilliancehour.com, get your kids ready for the future. Stop imitating white folks, start imitating intelligent Black folks. I don't want to imitate white people. No disrespect if you're white. I don't hate you, but I don't want to imitate white people. I want to imitate intelligent Black people. Imitate intelligent Black people because that's what they're doing. So digitalbrilliancehour.com. If you want to do a Dr. Boyce shout out, and you want me to shout out your business or your platform, just go to drboycefinance.com. There's the URL on the screen if you're interested. Okay, so let me pop in a couple things here before we bounce out. I'm gonna give you a stock pick, my stock pick of the week. I mentioned it yesterday, but I'll mention it again today for those who missed it. And so basically, you saw a major market drop. I pulled up an article here. This is on CNBC. Let me see where things are right now, because the market just now opened. So it looks to me like let's see here. I'm okay. 611 points down on the Dow. Yeah, that's a big dip. That's ugly. It's nasty. It hurts. But just remember, this is you're just pretty much giving money back that wasn't yours. So this is not a time to panic. This is a time to remain focused. If you've had cash on the sideline, this might be a time to go ahead and make a move. Maurice Harrell is right. Yep, that is the stock pick of the week. So it looks like Maurice pays attention every day. Good for you. All right, so let's it says here the stock futures dropped on Tuesday morning after an August inflation report came in hotter than expected. There's that word, expectations. The Dow Jones Industrial Average sank 406 points, which is now 611. The August Consumer Price Index report showed a higher than expected reading for inflation. There's that word, expectation, or expected again. Nothing matters without you knowing expectations. Every number must be put into context. Every number, let me say it again. Every number has to be put into context. Let me say it again. Every number has to be put into context. If I say to you, oh, I got a basketball player for the Lakers who scored 18 points, is that good? Well, you don't know who's the player. If it's LeBron James, no, it's not good. But if it's the guy at the end of the bench, then yeah, it's a career move. So that word expectations keeps popping up. So they said economists had expected, there's the word again, expected a decline of 0.1% for overall inflation, with a rise of 0.3% for core inflation. So they expected core inflation to rise. So anybody who tells you that the market dropped because inflation is high, they're wrong. That's not true. We knew inflation was high. Anybody who says that the market dropped because inflation went up is wrong, because they knew that core inflation was going to go up. The problem was that it went up more than was expected. When you put the number into context, the market pretty much, it's not like it's in emergency mode. What it's kind of saying is, okay, we got to make a correction. That's why they call these market corrections. This is not a crash. This is a correction. A correction means, oh, we thought your stock price was supposed to be here, but let's correct that. It's actually supposed to be here. So we're going to take a couple dollars off of the stock price to make it more consistent with the accurate price based on the information that we have on this company. Okay, so ultimately, that's pretty much what you saw, and that's what's going on. They said that the report is one of the last the Fed will see ahead of their September 20 20th meeting, which they're expected to deliver their third consecutive 0.75 percentage point interest rate hike. So right now, the Fed funds rate, which is the rate that banks that the Fed charges banks to loan money to them, is about 2.5%, 2.5%. I can't remember what the number is exactly. They expect that number to get all the way up to 4.5%. So that means that the Fed is going to hike interest rates by at least 0.75 points, most likely. They expect them to continue to hike the interest rates all the way into 2023. What this is going to do is it's going to slow down the economy because it's going to make it harder for companies to make money. Once it's harder for companies to make money, then you're going to start seeing an economic slowdown, and you're going to see another revision of expectations. There's that word again. And you're going to have more information that comes in, information about those expectations. And as this information comes in, this could cause a downward draft on the economy. That does not necessarily mean that it's going to cause a downward draft in the stock market. Why? Well, because the stock market is what is called a forward-looking indicator on the economy. The stock market, it does everything that every human being should do in their own lives. They don't look at where things are now. They look at where things are actually going. That's actually how you should date. You should date people like their stocks. When you pick a boyfriend or a girlfriend, don't look at where they are now. Don't look at him. When I was broke and didn't have no money, it would have been silly to look at me based on where I was then, because if you looked at what I was doing, you could see where I was going. I was going to eventually be successful on some level at something, because all I did was study 7 hours a day when all my friends were going to the club. So you could look at me at 28 and say, okay, he's broke. He can't pay his rent. He's struggling right now. He's kind of a nerd. He's driving a hoopty. And I did have a girl one time who told me she wouldn't date me because I had an ugly car. So screw you. Anyway, I'm kidding. So maybe I'm not. But anyway, but the point is, though, where you're going, your actions determine where you're going. So the question is, where is this economy going? That's how the market's going to react. So what you're always going to see is you're going to see something that frustrates people who don't invest. The thing that frustrates people who don't invest is they always sit around and they say, gosh, dang it, the economy's doing so bad. But yet those stupid people that are investing in the stock market, they're making money now. They're talking about you, because most of y'all are investors. If you're not an investor, I hope that you'll become one. Don't get mad at rich people. Just become one. Learn how to do what they're doing. I'm not telling you rich people are better than you. I'm just telling you that you're as good as they are. So, let's get with the program. So the point is that the stock market will probably start moving upward long before the economy actually turns around. So what you could end up seeing, if I don't know. Nobody knows exactly what's going to happen, but you could end up seeing a scenario where the economy is deep in the mud. The economy is really struggling. We're in the middle of a big recession, and every headline is, GDP is down, unemployment is up, the economy's slowing down. But yet the stock market is rallying like crazy. That's what makes the stock market look a little bit delusional. In fact, some of you, let me just take this analogy full circle. How many of you consider yourself to be a successful person? How many of you, give me a yes in the chat, all the people in this room who are the black people that they don't tell you about, who are doing well because you made sacrifices when you were young, you made good choices when you were young, you worked hard when you were young. How many of y'all are in here? I know you're in here because I see you all the time. I meet you. I literally meet tons of black business school students who are millionaires right now. Literally, like they're just quiet millionaires. They don't brag about it. They don't wear Gucci belts. They don't wear a ring on every finger. They don't floss and stuff. They're not driving a Bentley, none of that stuff. But they're paid because they know how to keep their money. How many of you are in that category? Okay, so one of the things that you probably understand is this fundamental idea that what you put in is what you get out. You reap what you sow. If you plant the seeds, you'll get the harvest. If you plant no seeds, you'll have no harvest. A lot of people don't understand that. They run around through life wondering why they have no harvest. But if you look at their life, they're never planting any seeds. So I don't know who told them. Maybe they thought white people were going to come give them the seeds. I don't know what they thought, but whatever they thought did not work. So here's the deal. You understood this basic idea that there's a connection between what's happening now and what's going to happen in the future. You've learned how to time travel psychologically and spiritually to the point where you said, okay, times are tough now, but I'm going to spend a few years living like nobody else will, so I can spend the rest of my life living like nobody else can. Well, the stock market the stock market kind of operates in the same way. Basically, the stock market says, okay, we see where the economy is now. We see where this company is now. We see that this company is losing money. We see that this company is having some struggles. We see this company is relatively small. But let's not look at where they are now. Let's look at where they're going. Let's look at what they're doing now, and let's try to project into the future to determine what that's going to look like in terms of economic outcomes. And then we're going to value the company not based on what they're doing now. We value the company based on what we think is going to happen in the future. So that's how they look at individual companies, and it's also how they look at the aggregate economy. So just be ready for that. You're going to have a little bit of what appears to be confusion in terms of where the economy is versus where the stock market is. And a lot of people are expecting stocks to rally. In fact, another area, and I've been doing a lot of research on this, is crypto. I'm going to ramp up my investments in crypto, particularly Bitcoin, because I have strong reason to believe that if you are consistently investing in Bitcoin right now and you do not sell your Bitcoin, you don't sell it, you hold on to it till in about 7 to 8 years, you're going to be blown away by the price of Bitcoin. I don't know. Again, these are projections. They're fuzzy. Sometimes things don't play out the way you expect. There's always the unexpected. These are what you call black swan events. There's the known, the unknown, and the unknown. But let me just tell you this. I am a firm believer now. I've always believed in Bitcoin. Let's just be clear. But I'm a bigger believer than ever that once this crypto winter is over, Bitcoin's going to go kaboom. And everybody in the year 2030, if you're watching this video in 2030, I want y'all to tell me if I'm right or not. I can't see. You're in there. I know you live in the future. And I want you to watch this video and tell me how right I am. Because I believe that by the year 2029, 2030, which ain't that long ago. Remember, 2030 to 2022 is not, it's like what 2014 is to now. Right? That's not a long time ago. How many of y'all remember 2014? 2014 was not a long time ago. 2014 was just a few days ago, it seems like. So 2030 is not that far away. When we talk about it, it seems like the future, but it's not. By the year 2030, I believe Bitcoin will be like far higher than what it is now. I'm talking about like maybe 5 to 10 times in price what it is right now. So I believe, again, this is just my thought, not investment advice, this is what I'm doing. I believe that a person who consistently puts money into Bitcoin and does not sell no matter what is going to be super freaking rich by the year 2030. There you go. You're welcome. All right. So anyway, do me a favor, hit the thumbs up button, thumbs up, share, subscribe if you haven't done it yet. Also, just a reminder, the shout out for today. I only grabbed one today, but there's some others out there. But digitalbrilliancehour.com. Thank you for being a sponsor of the podcast. If you'd like to sponsor a podcast or get a shout out on the platform, just go to drboycefinance.com. You support us, we support you. We'll promote your business, tell everybody all about it. And also another great place to support your business is the All Black National Convention, which is the premier gathering of intelligent Black people from all around the world. It's going to be October 28th through the 30th in Charlotte, North Carolina. So if you'd like to come to the convention, I put the link to the tickets at my website, boycewatkins.com. There's also a link if you want to be a vendor or if you'd like to actually work at the convention and help us get things done. We don't take corporate sponsorship, none of that stuff. We are self-reliant. We believe in Black ownership, and so we run this. We pay for this ourselves. So if you can't afford the ticket price and you want to get a free ticket, then you can actually apply to be a volunteer. So if you volunteer and give us 4 hours a day, then we will let you into the conference for free, so you can spend the rest of the time enjoying the conference. So if money's tight, then you can also find the link to be a volunteer at boycewatkins.com. But there's a training process. You got to spend a few weeks learning how to do it so we can do it right. All right, guys. So the stock pick of the day, I forgot to mention this, is Stellantis. Stellantis, the ticker symbol is STLA. I put it on the screen for you guys in case you want to take a look. I'm not telling you to go buy it, but I am saying that I am going to buy. I did buy some shares. I'm going to buy some more because the market's down. And when the market goes down, that's not a time to run. That is a time to actually own more. In fact, Warren Buffett had it right when he said that the stock market is the only place where people buy more when the price goes up. And then when the price goes down, they buy less. He said that doesn't make any sense. You don't go to the grocery store and hope that the price of carrots is double what it was the last time you were there, do you? You don't say, well, hey, I can't buy this meat. This meat is 30% off. I don't want, well, maybe if you're talking about meat, assuming it's quality meat, right? Yeah, or I'm not gonna buy any steak this week because steak should be more expensive before I buy it. I need it to cost double in order for me to buy it. You don't do that, right? But people do that when it comes to investing. Why? Well, because most people are not like you. Most people don't know how to think for themselves. They think in a way where they follow the crowd. A lot of people follow the crowd. David Hirschleifer, who was on my dissertation committee, he was a great guy, actually was one of the leading experts on earth in this whole area called herding theory. And basically they concluded so many words that people that invest, they just follow the crowd. They don't really necessarily know what the right move is, so they just do what everybody else is doing. So when stocks go up, you start seeing money herding in, and that unfortunately is money coming from people who are what they call uninformed investors, and they end up losing. So I don't want you to lose. I don't want you to be uninformed. I want you to be the canary in the mine, and I want you to have the courage to make the move before everybody else makes the move. So keep that in mind as you invest. That's how smart investors operate. Okay, guys, I got to get out of here. I'm going to be meeting with some of you in private a little bit later. I have a program at drboyceprime.com, which is all focused on how to make money by selling stock options and all kinds of other ways to generate passive income. So if you have a question for me or you'd like to join and get a little bit extra support on what you're working on, just go to drboyceprime.com. We'd be happy to have you. All right, guys, I'm out of here. Please have a wonderful day. God bless you. Hit the thumbs up button on the way out, and I'll talk to you soon. Take care now. Peace.